Hi there, welcome to Kneppy Invest. One thing I'm getting really excited about lately is researching companies that have recently IPO'd on the ASX, and I am finding some fairly interesting companies, including the company I'll be featuring in this video, Aerison. So this is an introduction to this company, and one of the catalysts behind me doing this video is Aerison released a revenue upgrade recently. And that revenue upgrade did get me interested in doing a little bit more research on this company. Aerison is an engineering services company, and I'll talk more about what they do in the next slide. Aerison was founded in 1988. However, Hibbs and Leon sounds like an exploring duo. Acquired this company in 2016. Giuseppe Leon, he's the CEO and Managing Director, while Daniel Hibbs is the Chief Operating Officer and Executive Director. Both of these gentlemen hold 25.5% stake in the company. So together, they hold a controlling interest. You call this definitely skin in the game. Some investors out there love skin in the game because the interests of those Giuseppe Leon and Daniel Hibbs are aligned with the interests of the shareholders. So they all want the company to grow in the future. Aerison listed on the ASX 12th of July 2021. The market cap currently of Aerison is 64 million. That's at a share price of 20 cents. Now, the company did list at 20 cents, and that straight away tells you the share price has done nothing since they listed 3 months ago, and the ticker code for this company is AE1. Now let's talk about what Aerison actually does in a little bit more detail, not too much depth. This is from either the presentation they did or their prospectus. Aerison is a multi-discipline engineering, design and construction company, self-performing multi-discipline EPC engineering, blah, blah, blah. The thing that really interests me about Aerison is the middle thing right here, and that's specialist environmental, custom design and built-up solutions that reduce the environmental impact of industry, dust control, emissions control, water treatment, noise abatement, studies, audits, compliance, testing. That is going to be a massive growth area over the next few decades, and I am interested in any company that has its foot in the door in that area. Their engineering construction, specializing in structural, mechanical, piping, electrical, and instrumentation. I have a much lower interest in that area of business that they do. And if you look at sort of the industries they do work for, mostly with the mining sector and the infrastructure sector and utilities sector as well. So they do have a wide area of sectors they are performing works for. Typically, I don't like to start any research on a company that has just IPO'd until they release their first set of financial numbers. And Aerison did that. They have released their half-year numbers for financial year 21. Revenue, 62.3 million, up 22% from the previous year. The next line was not all that attractive to me. They have become operational cash flow negative from being positive. So operational cash flow has gone from 3.2 positive to negative 8.7 million. As soon as I saw that, I needed to know why. They did provide some insight in the commentary, talking about net cash outflows was a function of the increase in contract assets of 72.4% to 26 million as of 30th of June 2021. The increase in contract assets arises from work in progress on construction contracts in the ordinary course of business. Now, we're going to talk about their financial year 21 expectations, and they are expected to be operational cash flow positive for the full financial year. Capital expenditure, 8.4 million, so they do spend a fair bit on that, and they are profitable. So $2 million of profit for the financial year 21, up 23% from the previous financial year. That is off a low base, however. Another thing that was not quite as attractive to me as it could be is they do have $25 million of net debt. A couple of things that did come through my mind as I looked at this company was, why did they IPO? And the first thing that came to mind is they were operational cash flow negative and they needed some money for working capital. And that's exactly what they did. All the money they did raise through this IPO went straight to working capital. That's not the best way, I believe, a company can deal with the proceeds from an IPO, but management have decided that's the best way they can use their funds. I would prefer maybe it being used for other reasons like acquisitions, that sort of thing. And the enterprise value of Aerison, because they have that net debt, is more approaching $100 million than $50 million without that debt. I do prefer companies like Aerison not to have too much debt or be net cash, but Aerison is net debt. So that's one, I suppose, red flag I do have against this company. After noticing a few red flags when I look at their financial year 21 numbers, I just decided to look at their financial history. And sometimes you don't get a lot of this financial history for companies that have recently IPO'd. But Aerison have provided their financial year numbers over the past 3 years and also given their forecast numbers for financial year 21. And the main thing here is revenue has increased consistently over the last 3 years, rising from $51 million in financial year 18 to $100 million this year, or financial year 20, I should say. So it has doubled over the past few years, and they are forecasting revenue to grow further to $130 million for financial year 21. Not only that, they are expecting profit after tax to rise even further. It was $1.3 million in financial year 18, $5.1 million in financial year 20, and they are expecting profit to be $6.4 million in financial year 21. So it does look like things are on the right track for this company. Another thing that Aerison did provide, either in their prospectus or their first presentation, which they did release the day they did list on the ASX, was around cash flow, historical cash flow, and forecast cash flow for financial year 21. Most companies do not give forecasts for cash flow. Aerison did that. And even though they were operational cash flow negative for the half year, there are expectations that Aerison will be operational cash flow positive by $7.8 million for financial year 21. So very happy they included this in their prospectus and their presentation. And even after capital expenditure, they will still have cash flow coming into the business. So hopefully they can hit these forecasts, because if they can't hit these forecasts, there is a chance the share price will suffer and fall from 20 cents. The whole catalyst for me looking further into Aerison was an announcement this company released on the 5th of October 2021 in regards to a revenue upgrade. New contracts secured totaling $140 million and an increase in financial year 2022 revenue guidance of 15% to $180 million. This company is continuing to grow, and that is exciting to me, who is looking for companies that are growing revenue at a consistent rate. Some interesting things in regards to why they have increased financial year 22 revenue. They have contract secured for the engineering, procurement, and construction of a 40 megalitre saline water reserve osmosis plant for an iron ore producer. I am assuming here that a saline water reverse osmosis plant is just a desalinization plant. So I'm assuming something there, but saline does mean salt, and reverse osmosis does seem like it's just hinting towards desalinization plant. I could be completely wrong. And the other contract was for the construction and modular assembly of pipe rack modules for a lithium producer. I have no idea what pipe rack modules are. Although Aerison has only been on the ASX for 3 months, you can still read some interesting tidbits in the 3-month daily chart. I've already mentioned quite a few times in my videos, when a company IPOs on the market, you sometimes will see an initial hype, and that initial hype will drive the share price higher in the first few days of trading. And that happened with Aerison. They listed at 20 cents, and the share price rose as high as 29 cents on the 4th day of trading, and then that hype waned away. And for all these companies where you do see this initial hype and then the hype wears away, the share price does fall towards, not always, but towards the IPO price. And that has done exactly that with Aerison. Share price has moved back towards 20 cents. In fact, a few days ago, the share price actually moved to a low of 18.5 cents. But right now, as I speak, on October the 17th, which is a Sunday at 8 p.m., the share price is currently right at 20 cents, the IPO price. So no uptrend here yet. We only have 3 months of history, so you can't really determine an uptrend. No excitement in the market. That's the other thing. Very low volume over the past month or so. So this announcement they did release on October the 5th did not draw any interest at all. That is all I have for this introduction to a recent IPO called Aerison. Hope you've enjoyed this video. If you have any questions about this company or any other company on the ASX, please leave a comment, your thoughts, your opinions, your questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.